Week lows, though. Fourth quarter earnings season in full swing, and so far, some really big multinationals have fallen short of expectations for the same reason. Procter & Gamble, Pfizer, Microsoft, Caterpillar, blaming the strong dollar. Even Apple said, you know what? We're having problems here maneuvering through the strong dollar landscape. But one of the largest chemical companies in the world with operations in more than 100 countries, Dow Chemical managed to top Wall Street profit estimates despite global headwinds such as the strong dollar and falling oil prices. So what's Dow's chemical formula for success in this atmosphere, Andrew Liveris, where you have very low oil prices, a strong dollar? It's like going through a video game and trying not to get hit by those zombies, I guess.
Hi, Liz. Yeah, I mean, look, we have a portfolio and a mix that we built over these last many years to be resilient under all sorts of macro conditions. We have at Dow a program called Self-Help. We have margin management and cost controls. We, as you quite rightly said, are global. We have a third of our asset base in Europe. What we've noticed through the volatility of the last quarter or so is demand is strong. And we've been saying for a while, low oil price is actually, at the end of the day, a good thing for the global economy if consumption goes up. We were up in terms of operating rate, our highest fourth quarter operating rate in 5 years. It was actually our highest operating rate from a year's point of view since 2007. So demand is up, which means even though we're seeing some price loss because of the low oil price, our diversified portfolio, our high operating rate based on demand basically covers that and then some.
What a lucky girl I am. 1 week and twice I get to speak with you because you and I were on a snowy peak in the Alps of Switzerland at Davos, and you told me that your European business looks a lot healthier. And I found that very interesting because Ford just spoke to us this morning, and we're going to be having that interview just coming up, and their stock is doing well because they've managed to figure out that Europe isn't the worst picture in the world now. But where do you look for your biggest nugget of profits? You had said the U.S. looks strong. Let's do second to the U.S.
Well, in terms of absolute size, Western Europe is a third of our company. Western Europe is recovering. I mentioned the demand side, and our operating rate in Europe is actually its highest in about 7 years. So there's demand, number one. Number two, we have a flexible input. The commodities we use in Europe, we can take advantage of low-cost LPGs and propane, and we bring that into Europe, and frankly makes us low cost in Europe, which means not only are we getting a bigger share of a slowly growing pie, but actually we can beat out our competitors. So our European profits came up in the quarter, and frankly it's a tailwind if oil stays where it is for Europe and our European business. That's, again, part of the diversification strategy we've had.
Do you hear that, everybody? It's a tailwind if oil stays cheap. Listen, we just had Congress and the House okaying a bill that speeds up liquid natural gas exporting processes. You and I have talked about this. Could be a double-edged sword here. A lot of Americans say, yay, we can make so much money with all of our natural gas and selling it overseas. You've experienced it on the other end where Australia did the same thing. And what happened to prices of liquid natural gas when they started exporting it?
Well, if you want a one-speed economy and you just want to export commodities and don't add value to them, then my home country of Australia is a great example of that. Australia is exporting all of its commodities and losing its entire manufacturing base. I think what we've got to do is extract, enhance, and export. Of course, that should allow for balance. We should export where it makes financial sense to our allies and our trading partner. But we have over $100 billion of value-add investment in this country because we have available, accessible, low-cost natural gas and natural gas liquids. And that is going to create 5 million jobs for the economy. Why would we want to go to a one-speed economy?
Yeah, you got to be careful. There are always many different prisms through which to look. And as we say goodbye, Andrew, while we were on that peak in Davos, you showed me a Greek tradition of smashing two eggs together. We hold the eggs and then we hit them, and whoever's egg breaks first. What happens? It's a Greek tradition because you're Greek. Mine broke and yours didn't. What is it? Is that going to be horrible for me? A terrible 2015?
Well, it's an Orthodox tradition over Easter, so I guess we'll have another shot at it, Liz. But the answer is, look at our quarter. It tells you that my egg winning gave us a great quarter.
They did. I don't know what my egg losing. We'll find out. I'm afraid to step out on 6th Avenue tonight. Andrew, great to see you. Thank you so much. Andrew Liveris, Dow Chemical Chairman, CEO, and President.